we have more banks that look like they are about to collapse. Can the Fed save them all? This is how screwed up things are, right? And that's why this morning, all the banks are down majorly. PacWest Bank Corp down 42. Even Charles Schwab is down 9%. West Alliance Bank Corporation down 62%. And it's just, it's just a horrible day for banks right now, right? It's a horrible, horrible day. And in case you're wondering, banks have over-leveraged. And they are greedy, and now they're getting bailed out. They're getting bailed out, all right? So, First Republic, someone mentioned this last week already. It didn't really compute in my head yet, but someone was saying how their local First Republic bank had line out the door because people were afraid they were going to shut down. So, there was a bank run already happening, right? So, First Republic also, this weekend, made a deal with the Fed and JP Morgan because they were afraid they were going to run out of money because a bank run already started happening, right? Now, they said they have up to $70 billion of unused liquidity sitting there, and they could still get a loan if required with this new Fed facility loan program, which also developed over this weekend. So I'll explain what that is. But basically, First Republic they're saying, okay, we're safe, don't worry, right? But obviously, a lot of people are worried because they were down 65% in the aftermarket, okay, or the pre-market, I should say. I don't know what they opened up at. They opened up at negative 65% and trading is halted. So, whenever that happens, that's not a good thing, right? And First Republic is out of San Francisco, and they have like 200 something billion. So they're not a small bank. They're a little bit smaller than SVB, but they're quite large too. And why are they in trouble? Well, who knows? Leverage, greediness, right? They cater to businesses and wealthy individuals who tend to have large uninsured deposits. That's the problem. FDIC insurance only goes up to $250,000 for businesses and individuals. I think married couples goes up to $500,000, but that's it. So when you have a lot of wealthy individuals that's storing like $5 million, $10 million, or businesses storing $20 million, $100 million, $1 billion, right? FDIC insurance is not going to cover that. And I think people don't realize that. People just think, well, banks, they've been around for so long. We got to trust them, right? They're not going to go under, right? And most people that feel that way forgot about 2008 when every single bank on the planet was about to collapse, okay? So there's that going on. Right now, it seems like the Fed is desperately trying to save them. But, of course, if there's continuous bank run happening with them and all the money gets removed, they will go under just like everyone else, right? Signature Bank also closed down over the weekend. New York regulators actually just went in and said, hey, you're done. We're taking over. And they're considered the third largest bank failure. So think about it. We just had SVB Bank, which is the second largest U.S. bank failure. Now, Signature Bank, which is also pretty big, they have been seized as well. Okay? So much is happening. Every bank, one after another, after another, after another. Unfortunately, Signature Bank is crypto-friendly, or they used to be. So some of the projects have exposure. For example, Coinbase has $240 million locked into Signature. Paxos has about the same. Celsius even have some locked into Signature Bank, right? So it's not a good thing. But I guess what makes the situation a little bit better is the fact that the Fed is going to bail them out. Remember last week? Remember last week when everyone's saying, oh yeah, Janet Yellen said there's no more bailouts, right? We're not going to bail out SVB Bank. And I said, shh, okay? She has no clue on what's going on. They will be bailed out. And of course, they were. SVB Bank is being bailed out. Signature Bank is being bailed out. First Republic is being bailed out. Everyone is being bailed out. So the good thing is SVB Bank deposits are opening today. So like Circle, for example, with their $3 billion locked in, and everyone else that's in SV Bank, they will be able to take their money out. Okay, and it's the same thing with Signature Bank. Even though they are closed down, deposits are open today. So everyone could take out all the money they want because the Fed is bailing them out. Okay, they're going to cover whatever is not left over, they will cover, right? But on top of that, they have decided to come out with a new program. Okay, it's called the Fed Facility, and this applies to all future banks that may be on the brink of collapse, and this is a stopgap for them. Okay, one of the problems with SV Bank is they held on a tremendous amount of U.S. bonds, and when they were trying to sell them, they would incur losses, basically, because no one wants a bond that's paying 2% interest when you could buy a bond that's paying 5% interest right now, right? So the U.S. government came out with a new program called Fed Facility, which means if you're holding on an unmatured bond, you can now put down that as a collateral and borrow with the Fed. A new loan that you could borrow for up to 1 year. Okay, I don't know what the interest is, maybe 0, right? But I was thinking about it this morning, and it's really screwed up. It's really screwed up. So the Fed, or basically the U.S. government, has no money, has to sell bonds basically to borrow money, right? Because the Fed doesn't have money. So they're issuing bonds to basically borrow money. Right? Now, the Fed is going to loan out money based on the borrowed money back to the people they have borrowed from. Does that make sense? Does that make sense? Where are they getting the money to loan out when in the first place they didn't have any and they needed that money from the person they borrowed from, right? So to put it into something that is more understandable, let's say I needed to borrow money from my friend, right? So I said, okay, give me $100. And he gives it to me. I give him a slip. I say, I owe you $100. Okay. Now my friend is in trouble. So I say, okay, I could loan you $100 if you put your collateral, your IOU note with me. Okay. But the problem is, I needed to borrow that money in the first place from him. But now I'm giving that money I needed, and I loaned it back to him, right? So how does that make sense? Essentially what it means is the Fed needs to print more money. That's what it means, because there's no money. Now you're loaning the money that you borrowed back to the people that gave it to you in the first place. So how do you have money to give them back? You don't. So they're going to print more money. So this basically is going to lead to more inflation, a lot more inflation as more and more banks go under, right? That's just how it is. Where's the money going to come from? Nowhere, right? You have to print it. So I mean, SV Bank's UK arm sold to HSBC for one pound, about $1. Okay. So it's one of those situations where, yeah, you may be buying them for $1, but you're buying a whole lot of debt, I guess. Yeah, that's how much banks are worth after a bank run or after a collapse happens, right? Now, the good thing is, I predicted this last week. On Friday, I was telling you guys, right? Because of these bank failures. Well, on Friday, there was only one so far, or two, the second SV Bank. The Fed has to start cooling it because now they're realizing that the effect that they've been causing, basically, right? It's been silent. These banks have been covering it up, has not been telling anyone, but now they are,